Well, g'day folks, it's Matt Hayson here looking at everything impacting the property market in Sydney this week. Well, we did see a bounce in the final auction clearance rate across the city. The final clearance rate coming through at 46.6% from 1,423 properties, which is a really healthy volume. Now you're seeing this graph here that the two biggest auction markets in the country, being Sydney and Melbourne, they are trending in parallels, as you can see with that overall auction performance. Now, interestingly, we're often asked in the market who is buying currently in this climate, and the latest data from CBRE was quite interesting, and it showed that upgraders are the dominant buyer profile at the present time, closely followed by first home buyers and investors, although they did ease back in Q4, while downsizers are certainly in the market and they have ticked up in Q4 of this year. Also this week, it's been widely reported that the cash rate being higher for longer is causing financial uncertainty and stress for many homeowners. Now, there's no question many homeowners are holding out for the rate cutting cycle to kick into gear, as it's largely happening around the globe. But as it stands today, here are the latest Big Four bank forecasts for when they believe the next cash rate cut will occur. CBA and ANZ, they're cautiously tipping it will be in February next year, while Westpac and NAB are pushing that out until May 2025. But as we know, these forecasts are largely useless, as the banks tend to change them every 30 days or so. But what is important this week is APRA, the financial regulator, has been well under fire for lowering the loan serviceability settings. Currently, all borrowers are judged on servicing their loan 3 percentage points higher than the current market level. Now, the serviceability rate was 2% in 2014. It edged up to 2.5% just before the pandemic, and then was lifted to 3% in 2021. Now, for any mortgage holder or those looking to get into the market and refinance, it means that you're being stress tested at an interest rate level between 9 and 10%, which is really quite significant. But sadly, for borrowers, there has been no give from that rate relief from APRA, as they are holding firm to keeping that 3% buffer during the week. And finally this week, SQM Research, Louis Christopher, has released his boom and bust report for 2025. Now, this report has garnered increased attention in recent years, as Mr. Christopher releases 4 scenarios that could impact property prices around the country. But of course, we want to look at Sydney, and in this case, we want to look at Mr. Christopher's base case scenario for Sydney, which would be a 25 to 50 basis point rate cut by mid-2025. Population growth continues at over 500,000 per annum, and there will be no new inflationary outbreak. Now, if this all unfolds, the forecast is that Sydney property prices will ease back between -5 to -1%. In fact, only scenario 3 will point to any price growth in 2025, and the big driver behind that is if there will be early rate cuts will kick into gear. Well, that's what's gone down in and around the Sydney property market this week as we close off November, and what a weekend we have in store as well, with some amazing properties still available, and our entire team looks forward to seeing you out and about. Thanks for watching, and I will catch you all next week.